हेलो एवरीवन, वेलकम। सो लास्ट दो वीडियोस में हमने आईडीटी के 13 एमसीक्यूज डिस्कस कर रखे हैं। आज हम इस वीडियो में एक डिस्क्रिप्टिव क्वेश्चन को डिस्कस करेंगे जो क्वेश्चन नंबर है 14। सो इंस्टीट्यूट की आरटीपी नवंबर 2020 में दे रखा है। सो हम क्वेश्चन नंबर 14 को पढ़ने जा रहे हैं और इस वीडियो को देखने के बाद आपको 14 क्वेश्चन नंबर के अंदर कोई डाउट नहीं आएगा, आई एम श्योर। So KPI Limited, registered in the state of Himachal Pradesh, has a manufacturing unit at Badi, Himachal Pradesh. The company manufactures two products, XT and ST, which XT is taxable and ST is exempt from GST. Now KPI Limited has furnished the following details. Serial number 1A, जिसमें machinery 1 purchased on 1st July for being used in the manufacturing XT and ST. So this is the part of common credit and that amount is going to be credit into the electronic credit ledger. ठीक है. Serial number B, machinery 2 purchased on 1st July for being exclusively used in manufacturing product XT. So this is exclusively used for the taxable supply. So credit of this amount is available and that amount is also going to credit into the electronic credit ledger. Point number C, machinery 3 purchased on 1st July for being exclusively used in the manufacturing product XT. So this is used for the non-taxable supply. Amount of this is not going to be credited into the electronic credit ledger and ITC of this amount is not available. Point number D, machinery 4 purchased on 1st October last year for being exclusively used in the manufacturing product XT from 1st July. Such machinery will also be used for manufacturing XT. So before that, this machine is used for the non-taxable supply. Now they are using this machine for taxable supply. So the 1,44,000, this whole amount is going to be credited into the electronic credit ledger. This is the amendment which is this year, and for calculating ineligible credit in this machinery, we need to deduct 3 quarters from October to 1st July, 3 quarters, right? 5% per quarter, we need to deduct that amount from this amount. But in electronic credit ledger, we need to credit whole amount 1,44,000. Okay. Point number E, machinery 5 purchased on the 1st January for being exclusively used in the manufacturing product XT. From 1st July, such machinery will also be used for manufacturing product XT. So before that, they are using this machine for taxable supply and this machine is purchased on 1st January. So that 18,000 amount is already credited into the electronic credit ledger. So we are not going to credit again this amount. And now this is the part of common credit. Why? Because we are using this machinery for both the goods. Question number 5. Point number F. Machinery 6 purchased on 1st July 2 years ago. So that amount is also, and that is used for both the goods, and that amount is also credited into the electronic credit ledger. So we are not going to credit back this amount 1,08,000. So we are not going to credit this amount, and that is the part of common credit. So they ask us 4 questions. Question number 1, amount of input tax credit to electronic credit ledger for the month of July. Okay, and amount of ineligible credit for the month of July, amount of aggregate value of the common credit, and common credit for the month of July. Okay, so there is 4 questions and there is a note. All the conditions necessary for availing the ITC have been complied with. Make suitable assumption wherever required. So question number 1, amount of input tax credit to electronic credit ledger for the month of July. So the solution is like this. For the machinery 1, that amount is not credited into the electronic credit ledger. So we are going to credit this amount, which is 72,000. Then second amount, which is also used for the taxable supply. So credit of this amount is available and we need to credit this amount into the electronic credit ledger, that is 36,000. So 72,000 plus 36,000. Okay, 2 amount is credited. And machinery 3, this is used for the non-taxable supply. So we are not going to credit this amount because ITC of this machinery is not available. And fourth, machine 4, we are using this machinery for the non-taxable supply. Now we are using this for the taxable supply. So we are crediting the whole amount, 1,44,000 complete amount is going to be credited into the electronic credit ledger. This is amendment from this year. We need to credit whole amount, 1,44,000. Okay, and in machinery 5, this amount is already credited into the electronic credit. Why? Because first we are using this for the taxable supply, so we already credit this 18,000 into the electronic credit ledger, so no need to credit again this amount. And machine number 6, we already credit this 1,08,000 into the electronic credit, so we no need to credit again this amount. So the amount 72,000, 36,000 and 1,44,000. Three amounts is going to be credited in the electronic credit ledger, and the total of the credit of the electronic credit ledger is 2,52,000. Okay. Now question number 2, amount of ineligible credit for the month of July. So there is, in all these 6 machines, only the 4th machine is there is a part of ineligible credit. Why? Because we use this machinery for 3 quarters for non-taxable supply. Now we are using for the taxable supply or non-taxable supply both. So the part before that, from 1st October to the 1st July, that part is ineligible credit. So how we calculate this? 1,44,000 multiplied by 5% multiplied by 3. Why 3? Because there is 3 quarter. From October to July there is 3 quarter, and the amount is 21,600. So ineligible credit is 21,600. Now the question number 3, amount of aggregate value of the common credit. So which service is used for the both the goods, we are going to add that amount into the aggregate value of the common credit. So machine first is used for the both the goods, so this is the part of common credit, that is 72,000. Machine 2 or 3, which is exclusively used for their respective supply, so we are not going to credit 36 and 108 amount. And machine 4, this amount is used for both the supplies, so here we need to credit the whole amount. We need to consider 1,44,000. So the second amount is 1,44,000. Machine 5 is also used for both the goods, so we need to credit 18,000. And machine 6 is also used for both the goods, so 1,08,000 is also part of this. So we need to consider the 4 amount, 72,000, 1,44,000 and 18,000 and 1,08,000. So the total is 3,42,000. Okay, so that is the aggregate value of the common credit. Now question number 4, common credit for the month of July. What is the common credit for the month of July? So we have the aggregate value of the common credit. We need to divide this amount by 60 rupees. By 60. So the common credit for the month of July is 5,700. So 5,700 rupees is the common credit for the month of July. So this is the complete analysis of question number 40, and that is very important question. And they also consider some amendments into this question, one amendment. And thank you so much for watching this video. If you have any query regarding this question or any other question of the RTP, you can ask me in the comment. Thank you so much.